This video is created by Jagrat Creations. It is on conversion of a partnership firm into a company. So I want to solve one sum wherein I intend to go for accounting for conversion of a firm to company. Observe the sum on the screen which I intend to solve here before you. So this is the sum which I wish to solve here before you. Tulsi and Shyam were partners of Ramsey Brothers firm. The firm was converted into Deepak Limited on 31st of December 2017. The balance sheet of the firm was as under asset side, total 6 lakhs, liability side, capital, Tulsi, Shyam, general reserve, creditors. The company did not take over the debtors and creditors, but agreed to collect the debtors and pay creditors as the agent for a commission of 3% on the collection and 2% of the amount paid. So company has not purchased the debtors and creditors of the partnership firm, but committed to collect the debtors on behalf of the firm at a commission of 3% and also committed to pay the creditors of the firm on behalf of the firm at a commission of 2% of the amount paid to creditors. The purchase consideration was to be paid in the form of equity shares and preference shares in the ratio of 4:1, amounted to 5 lakhs. So 5 lakhs purchase price is to be paid in the form of equity share and preference shares, and the ratio of equity shares and preference shares is 4:1. And 30,000 is to be paid in cash. Company decided to value land and building 2,50,000. Though land and building book value is 2 lakhs, it is agreed to transfer the land and building at a price of 2,50,000. Machinery for 1,50,000. Though book value is 1,60,000, the exchange value is 1,50,000, stock 80,000. Debtors realized 1,20,000, including 20,000 previously written off as bad debt. So total amount collected from debtors is 1,20,000. That includes bad debt recovered 20,000. That is an income of the partnership firm received by the company that is to be noticed. Creditors were paid 72,000 in full. The firm paid the due amount. Prepare realization account in the books of the partnership firm and write journal entries in the books of company. Narration is not required. Now for this sum, first of all, I would like to prepare 2 working notes. One working note is to be prepared to find out the purchase price and find out the amount of goodwill or capital reserve that has occurred at the time of acquisition of the partnership firm. So this purchase price is to be determined by the company on the basis of this information. So first note I will prepare wherein I will try to find out the value of goodwill or capital reserve, whatever it may be. I will prepare second note about the debtors and the creditors which are assigned to me, means company, I am company suppose. So they are assigned to me for collection on the behalf of the firm, and creditors are required to be paid on behalf of the firm. For that also I will prepare working note. Now let me start. So this is the first working note that I am going to prepare. This is the details given to me in the sum. This is the balance sheet. All these details are given to me in the sum. Now this purchase consideration statement is bifurcated into 2 parts. What is purchased at what price and how the purchase price is paid, or whatever the purchase price is paid is availed by us first. Then we are required to find out the amount paid for goodwill. Let us do that. Now company decided to value land and building. So 2 lakh, what is purchased land and building? At what price? 2,50,000. So let me write down what is purchased land and building, 2,50,000. Machinery purchased at a price of 1,50,000. So what is purchased? Machinery. At what price? 1,50,000. Stock purchased for 80,000. Though book value of the stock is 1 lakh, the purchase price of stock is 80,000. We are required to consider the exchange value when we prepare the purchase consideration statement. So stock is purchased at a price of 80,000. Now on the asset side, if you look at land and building, machinery and stock are purchased. Debtors are not purchased. Debtors are not purchased by the company. They are assigned to company for the collection on behalf of the firm. So they are not purchased. Bank balance 20,000 is purchased. So these are the assets purchased. Creditors are also not purchased. So there are no other liabilities. So only assets are purchased. Now all these assets are purchased at a what price? The purchase consideration was to be paid in the form of equity shares and preference shares in the ratio of 4:1 amounted to 5 lakhs. So 5 lakhs rupees are paid in the form of equity shares and preference shares in the ratio of 4:1. So 4 lakhs is the payment made by way of equity share and 1 lakh is the payment made by equity share. What is paid? Equity shares. Of what value? 4 lakhs. What is paid? Preference shares. Of what value? 1 lakh. So equity shares 4 lakh, preference share 1 lakh. Over and above, 30,000 cash is also paid. So what is paid? Cash 30,000. So total purchase price paid for these assets is 5,30,000. Let me write down this 5,30,000 over here. From this 5,30,000, I will deduct price of land and building, machinery, stock, bank balance. That will be deducted. The difference payment, the payment made in excess of the exchange value of asset, will be identified as goodwill. So if you work out the goodwill by deducting from 5,30,000 the value of all these assets, you will get the value of goodwill to be 30,000. So this purchase consideration statement is prepared for the purpose of finding out the amount of goodwill. Now I want to prepare a second working note. The second working note that I prepare for the debtors that I have committed to collect on behalf of the firm. So I am assigned. Debtors are given to me 1,20,000 for collection. How much are the creditors? 80,000 are creditors that I am supposed to pay on behalf of the partnership firm. I'm just look at the sum from the viewpoint of the company. We are going to write down the necessary accounts in the books of ledger. At that time, we will view the sum from the point of view of the partnership firm, which is selling its business. So debtors 1,20,000. Creditors are how much? 80,000. So they are to be paid, debtors are to be collected. So whatever the amount that you received from debtors, they are to be applied for the purpose of payment of creditors. And any surplus of cash is left with the company, that is to be given to the partnership firm after deducting the discount to which company is entitled to. Now see. So these are the debtors. Now what is the information given to you? Now see. The debtors realized 1,20,000. So 1,20,000 debtors are there. Amount realized 1,20,000. But this 1,20,000 includes 20,000 previously written off bad debt. So bad debt recovered are 20,000. So from these debtors, see 1,20,000 is a total cash received, which includes 20,000 previously written off bad debt recovered. So 20,000 is that is being received by the company on behalf of the firm, but it is not out of this 1,20,000. So 20,000 is a bad debt record, another income. That is an income of the partnership firm, though received by the company. So this is an income of the partnership firm received by the company. So it should be, income should be transferred to the firm. That's an important point. So 1,20,000. So debtors from this 1,20,000, cash received from these debtors is 1 lakh. So 1,20,000 debtors are collected. At that time, we have received a cash of 1 lakh. So bad debts and discount is the difference amount. So 1,20,000 minus 1 lakh. So bad debts and discount works out to be 20,000. Now these creditors are 80,000. They are settled by making payment of 72,000. So these creditors of 80,000 are paid 72,000. So discount on behalf of the partnership firm is 80,000 minus 72,000. 8,000 is a discount that I have earned. Now on the basis of this 1,20,000 collected by me on behalf of the partnership firm, I am entitled to have 3% commission. And I have made a payment to the creditors on behalf of the partnership firm. On that I am entitled to have 2% commission. So that condition is already here. So let me write down first of all that. So 3% of 1,20,000 and 2% of 72,000 is to be allowed as commission. Now see, 80,000 creditors settled by payment of 72,000. So 8,000 is a discount received. This discount received is not the income of the company, but it is an income of the firm. And if it is an income of the firm, that will be credited to firm suspense account. Now 3% of 1,20,000 and 2% of 72,000. This is a discount to which I am entitled to. That will be deducted from the cash balance of the partnership firm, 48,000. So this is the amount that I need to pay to the partnership firm. So I am required to pay to the partnership firm 42,960. So these are the two working notes that I have prepared. After preparing these working notes, let me start writing the necessary accounts in the books of the partnership firm. Now I want to record these two transactions in the books of the partnership firm. So in case of partnership firm, this balance sheet is given. Partnership firm, the existence of partnership firm is brought to an end. It is converted into a company. So this partnership firm is dissolved. And when we are required to go for accounting of a partnership firm, in the event of dissolution, we are required to prepare. What are the necessary accounts that we are required to prepare? One, realization account. Second, new company account, that is Deepak Limited account, is to be prepared because the entire business is transferred to Deepak Limited. I am also required to prepare cash account, and partners capital accounts are also required to be prepared. Here I prepare partners capital account through C and Shyam. In this sum, you are not given the profit sharing ratio of the partner, so it is presumed to be equal. That's an important point to be understood by the students. Now, first of all the assets to be realized are transferred to the debit side of realization account at its book value. So, consider the details of balance sheet. Land and building, book value thereof debited to realization account. Machinery, book value debited to realization account. Stock, book value debited to realization account. Debtors, 1,20,000 also debited to realization account because these debtors are also going to be realized. Bank balance is also sold to the new company. If the bank balance is not sold to the new company, then bank balance will appear in the cash and bank account. But as the bank balance is also transferred along with business to the company, that is Deepak Limited, so we are required to transfer this bank balance of 20,000 to the debit side of realization account. Now, capital balance of Tulsi and Shyam, general reserve distributed equally between partners, so 40,000, 40,000. Creditors transferred to the credit side of realization account. So this is how all the details of balance sheet are considered for the purpose of closing down the books of accounts of the partnership firm. Now, let me start with this. Debtors are 1,20,000. Exact cash received from the debtors is 1,20,000. Now, my debtors of 1,20,000, I am partnership firm now because I am writing the books of accounts of the partnership firm. My debtors of 1,20,000 are realized by the company. How much amount is received by the company? Company has received 1,20,000. So, which company? Deepak Limited. Deepak Limited is a company to whom I have assigned my debtors for recovery. And 1,20,000 debtors are recovered, 1,20,000, but that includes 20,000 bad debt recovered. That matters little because it's a business is to be closed out. So 1,20,000 debtors of the partnership firm realized by the company. Deepak Limited is a receiver. Debit the receiver 1,20,000 to realization account credit 1,20,000. So 1,20,000 Deepak Limited account debit to realization account credit. So my debtors realized by Deepak Limited. Deepak Limited is the receiver of my funds. Debit the receiver. So Deepak Limited account is to be debited. Realization account is to be credited. Now payment made to creditors 72,000. Now this is my obligation. Creditors are my liability. Firm's liability. They are paid by the Deepak Limited. When the liabilities are paid out, what you need to do? Realization account is to be debited. And my liability is paid by Deepak Limited. Deepak Limited is a giver. Credit the giver. So 72,000 is to be credited to Deepak Limited account. So realization account debit to Deepak Limited account credit. Now I am partnership firm. I am required to pay commission to the company. What amount of commission? 5040. This commission is my expense. Just like dissolution expense or any other expenses and losses are required to be debited to realization account at the time of closing the books of accounts of the partnership firm. So this commission to be paid to the company, that commission is to be paid to whom? Deepak Limited. So the entry for that realization account debit to Deepak Limited account credit. So this is the entry for commission payable to Deepak Limited. Now what is the cash received from Deepak Limited? 42,960 cash is received. So cash account debit to Deepak Limited account credit. So cash account debit to Deepak Limited account credit. This is how cash received from Deepak Limited gets recorded. So all this working note, on the basis of that, necessary entries are made in the books of the partnership firm. Now, all assets other than debtors and creditors are transferred to the new company at a price of 5,30,000. So 5,30,000 is the sales value of my business. Now that sales value is to be to whom I have sold the business. I have sold my business to Deepak Limited. Deepak Limited is the receiver of business. Debit the receiver. So Deepak Limited account debit to realization account credit. So all these assets are transferred, including goodwill, at a price of 5,30,000, and Deepak Limited is the receiver, debit the receiver. So Deepak Limited account debit to realization account credit. This is the entry made for purchase consideration due. Now what is received in purchase consideration? I have received 4 lakhs rupees equity shares in case of in form of purchase consideration. Now these 4 lakh equity shares are going to be distributed amongst partners in the equal ratio because profit sharing ratio is equal. So it's better to distribute these equity shares and preference shares in the equal ratio. So 4 lakhs equity shares paid to Tulsi and Shyam in the equal proportion. So Tulsi and Shyam are paid equity shares in equal proportion, but they are received from Deepak Limited. Deepak Limited is a giver. Credit the giver. So 4 lakh equity shares are received from Deepak Limited. Deepak Limited is the giver, and these equity shares are distributed to Tulsi and Shyam. So if I want to write down the journal entry for that in the books of the partnership firm, equity shares of the new company account debit to realization, equity shares of new company account debit to Deepak Limited account credit, and these shares are distributed to the partners. So Tulsi's capital account debit, Shyam's capital account debit to equity shares of new company account credit. Same way, preference share 1 lakh distributed equally, so 50,000 each. Okay, they are distributed, but from whom you have received? You have received from Deepak Limited. So Deepak Limited is the giver, credit the giver, and these preference shares are distributed to the partners. So partners' capital account is debited. Now cash received 30,000, cash and bank account debit 30,000 to Deepak Limited account credit. So this is how cash received, purchase consideration received is recorded. So I have recorded the entry for purchase consideration due, received and distributed. Now these 2 working notes are taken care of. Now after this, I am required to close the realization account. So total of credit side minus total of debit side, I will get the profit of realization account. So my realization account profit works out to be 52,960. How this 52,960 is arrived at? By deducting from 7,30,000. All these values debited to the realization account are deducted. So I get the profit of 52,960. That is to be distributed equally between Tulsi and Shyam. So if you distribute equally 26,480, realization account debit to Tulsi's capital account credit to Shyam's capital account credit. This is how this profit is distributed. Now, this Deepak Limited account is going to be closed and with no balance because whatever the amount due from Deepak Limited is already been received. Now the partner's capital account is to be closed and they are required to be paid cash to the extent the capital unpaid. So here Deepak Limited account will be closed. Totals on both the sides will agree. Notice it. Now Tulsi's capital and Shyam's capital balance. So 2,86,480. So 2,86,480 minus 2,50,000. Similarly, 2,86,480 minus 2,50,000. So this is the cash balance required to be paid to both the partners. So partners are paid cash. So partners capital account debit to cash account credit. So cash account is to be credited to Tulsi's capital account and Shyam's capital account. Now your cash account total should agree on both the sides. So 42,960 plus 30. So 72,960 is the total on both the sides. This is how the ledger accounts are prepared in the books of partnership firm who has converted its business into a company. Now after completing the books of accounts of the partnership firm, let me write down the journal entries in the books of company. Now let me start with the accounting in the books of company. So these are the 2 working notes that I have prepared. Now I am company, I have purchased the business. So business purchase account debit to partnership firm, vendor firm account credit. So let me write down 3 journal entries on the basis of this purchase consideration statement, wherein business purchase account debit to vendor firm account credit, goodwill account debit, goodwill is purchased at a price of 30,000, land and building purchase, debit what comes in your ownership, so land and building account is to be debited, machinery purchase for 1,50,000, debit what comes in your ownership, so plant and machinery account debit, stock account debit same way, bank balance account debit, to business purchase account credit. Now, I am the company, I have purchased the business from a vendor firm, now I am required to pay vendor firm. What I have paid? I have paid equity shares, preference shares and cash. So vendor firm is the receiver, debit the receiver, so vendor's account debit to equity share capital, to preference share capital, to cash account. This is how 3 journal entries are recorded on the basis of this purchase consideration statement. After recording these journal entries in the books of company, 3 journal entries for purchase of business, now let me write down the journal entries on the basis of this working. Now, I have committed to collect the firm debtors of 1,20,000. So firm partnership firm debtors account debit, creditors account credit. The difference between 1,20,000 and 80,000 is the likely amount, not exact amount. Likely amount required to be paid to the partnership firm after collecting and payment of these creditors will be difference between the two. So that amounts to 1,40,000. Why the word 40,000 is to be recorded? The 40,000 is to be recorded in the name of firm suspense account. Because why the word suspense is used? Because 40,000 is not the certain ascertained amount. Why it is not ascertained? At the time of collecting debtors, whatever the losses occurs on account of bad debts and discount, they are the losses, not of the company. They are the losses of the partnership firm. So this firm suspense account payment will be decreased to the extent of losses that has occurred at the time of recovery from the debtors. But suppose that if some gain occurs at the time of recovery of debtors, just like bad debt recovered that has occurred in this state, so that bad debt recovered is an income of the partnership firm, and that income increases the amount payable to the partnership firm, so bad debt recovered will be credited to partnership firm suspense account. Now, similar another gain that has occurred to us, at the time of making payment to the creditors are 80,000, they are settled by payment of 72,000. 8,000 is a discount received, that's an income. That income is of the partnership firm. So partnership firm suspense account is to be credited for that. Now let me start with the debtors. I have recorded 1 lakh. So cash or bank account debit 1 lakh. 20,000 is a loss, discount and bad debt. That discount and bad debt loss has to be suffered by the partnership firm. So when the losses are to be suffered by the partnership firm suspense account is to be debited. So partnership firm suspense account debit 20,000 to firm debtors account credit 1,20,000. Now this bad debt recovers an income of the partnership firm. When income of partnership firm occurs to the company, that income should be credited to partnership firm suspense account. So bank account debit to firm suspense account credit 20,000, bad debt recovers an income identified to the partnership firm. Now creditors of 80,000 are paid. Debit the receiver, creditors account debit 80,000. Cash paid to them 72,000. Discount received is a gain income of the partnership firm. So it is to be credited to the partnership firm suspense account. So firm suspense account is to be credited with 8,000. So this is how payment made to creditors is recorded. Now I am entitled to a commission of 5040. Now 5040 commission is my capital income that will be applied to write off the amount of goodwill. So entry for that is this commission is the expense of partnership firm. As it is an expense of partnership firm suspense account is to be debited. It's an income. Commission is an income of the company. That income is applied for the purpose of writing off the amount of goodwill. So the journal entry for commission is partnership suspense account debit to goodwill account credit. This is a very important entry that students should notice. Now I have paid 42,960. So from suspense account debit to cash or bank account credit. This is how entries are recorded for this job performed by the company on behalf of the partnership. Now let me represent all journal entry on one screen. So this is how all journal entries will appear in the books of the company. So this is a sum which I have tried to explain while recording both the books of accounts, vendor firm as well as the purchasing company. I have tried to explain you this sum. I feel that you have followed all these concepts. Thanks to all.